All right, let's talk about the US housing market because in 2025, it feels bigger, way more expensive, and honestly, a lot more confusing than ever before. So, what is really going on out there? Let's just start with a number, and it's a big one. $55 trillion. That's the total value of every single home in the US right now. It's an all-time record, and it got this big, this fast, in a way that's kind of hard to wrap your head around. And yeah, that right there is the central puzzle, isn't it? I mean, you hear constantly about these high mortgage rates that are supposed to be scaring everyone away. You see headlines about prices finally dropping in some popular cities. So, if all that is happening, how on earth is the total value of the market still climbing to a record high? That's what we're going to unpack. To really get what's happening now, we have to look back at how we got here. Because, the growth over just the last 5 years has been, well, nothing short of explosive. Think about this for a second. Back in 2020, the entire market was worth about $35 trillion. Now, just 5 years later, after the whole pandemic buying frenzy and the more recent slowdown, we've added an incredible $20 trillion in value. That's a 57% surge. It's wild. Even though things have cooled off a bit, the overall value just keeps taking up. But here's the thing, that huge $55 trillion number, it's hiding a much more complicated story. This isn't one single nationwide boom. What we're actually seeing is a great divide. It's like a tale of two completely different markets playing out at the exact same time. And this split it's really night and day when you look at a map. On one side, you have the Northeast. States like New York and New Jersey are just seeing values soar. The reason? It's simple, really. There are almost no homes for sale. We're talking inventory that's half of what it was before the pandemic, which means fierce competition for anything that hits the market. But then, you look at the Sun Belt. Florida, Texas, the darlings of the pandemic boom. It's the total opposite story. Values are actually dropping as more and more homes sit on the market, and crazy insurance costs are making buyers think twice. And the numbers just make this divide crystal clear. New York State alone added a staggering $216 billion in housing value in the last year. Meanwhile, Florida and Texas have seen their market values fall by billions. It is a complete 180 from the trends we were seeing just a couple of years ago. So what is causing this? What are the big forces that are splitting the market in two like this? Turns out there are a few really powerful factors at play here. Okay, first, those high mortgage rates are hitting everyone, everywhere, no question. But their impact is totally different depending on where you are. In the Northeast, there are so few homes for sale that even with high rates, prices are still going up. But in the Sun Belt, it's like a perfect storm for sellers. You've got soaring insurance and property tax bills, plus a flood of new homes being built. All that together means buyers suddenly have the upper hand. And this quote from a real estate agent down in Florida just captures the mood perfectly. They said, "Real estate is cyclical, and we're definitely in a down cycle." I mean, that says it all. The boom couldn't last forever, and now those super hot areas are going through a natural correction. Sellers just have to adjust. But there is a silver lining in all of this, especially in the Sun Belt. That massive wave of new construction in places like Texas and Florida is actually creating pockets of affordability. It's helping to keep the overall market from falling too fast. And even better, it's giving a real shot to buyers who thought they were completely priced out of the game. Okay, so that is the complicated, divided landscape we're looking at. So the big question is, what does it all mean for you? Let's get into your playbook for 2025 with some real strategies, whether you're trying to buy a home or sell one. All right, if you're a buyer, listen up. In those cooling markets like Texas and Florida, you are in the driver's seat. You should be targeting new construction. Builders are desperate to make deals and are offering all kinds of incentives. For existing homes, don't be afraid to negotiate hard. Ask for price cuts, ask for repairs, and here's a huge tip. Get your insurance quote super early in the process. That sticker shock is killing deals at the last minute. And of course, keep an eye on all your financing options, whether it's an FHA loan or maybe an adjustable rate mortgage. Now for the sellers, it's the other side of the same coin. If you're in a cooling market, you have to be realistic with your price from day one. Overpricing your home right now is the fastest way to have it just sit there. Think about offering incentives to sweeten the deal, like helping out with closing costs. But if you're selling in the Northeast, you're still holding a lot of the cards. That severe lack of inventory is still very much on your side. So when you step back and look at the whole picture, it's clear the 2025 housing market isn't one simple story. It's a whole collection of them. You have these regional booms and these local corrections happening all at once, all under this giant $55 trillion umbrella. And that leaves us with a pretty fascinating question to think about. With all these powerful forces pulling the market in different directions, what in the world will the next cycle look like?